So the VIX has caught my eye for a potential swing low, and if that is correct and we do get a rise, that would imply most likely a lower SP 500. So I'm going to take a look at which one of the Wall Street indices, if at all, might be the better one to short. Now, just as a quick reminder that volatility is cyclical, so it goes through periods of rising and falling. We've had quite a sustained period lower since that high in March. There's another lower high at the end of March. And it's been getting pretty comfortable between that 1750 to 20 area. If you zoom in here, we've got this bit of a gap higher. Before that, we had these sort of lower wicks. Now, take this as a pinch of salt. Technical analysis doesn't really quite work the same as VIX. The main point here is that we've got a cycle, we're coming down. There's a little hint that it might want to go higher. And if that is the case, Wall Street indices might be looking for a bit of a sell-off. Now, if I flick over to Wall Street indices, you've got SP 500, NASDAQ, and Dow Jones futures. Clearly the first two are in very, very strong uptrends. Now, there's not really any immediate sign of an aggressive sell-off. And were it not for the fact that VIX was notably higher yesterday, I wouldn't even be looking at a potential short SP 500. But if we do get a sell-off in one, we'll probably get a sell-off in all three of them. But that brings me to the main point, which is out of all three of these, it's the Dow Jones that's made the hardest work out of the rally from that late March low. There's also a bit of a reversal pattern potentially forming. So if we do get a signal to sell Wall Street, I think for me personally, the Dow Jones shows the best potential for a downside move. Quickly looking or closer look at the daily chart, I've highlighted here a potential rising wedge or ending diagonal. And you can see you've got this lovely strong trend, and then price action gets messy, keeps on printing higher cycle highs just about. It's making really hard work of it. At the same time, whilst we're getting higher lows, the prices are kind of converging here. Now, these patterns, they're messy. I've drawn the lines just to show you what I'm looking at. They're not magic lines. They can be tested. They can be broken. These are pretty messy patterns to trade. So for me, it's highlighted potential for a top. And the fact it's forming beneath its previous record high adds weight to a case that if we do get a decent trigger or risk off trigger for Wall Street indices in general, the Dow Jones is my preferred one. So I'm not saying this is going to roll over tomorrow, today even, or whenever. We could well get another effort here looking at yesterday's bullish outside day. Maybe we'll get another attempt to drive higher. If we get another marginal high, bit of reversal, I'll get even more interested in the potential for reversal. And if we do get bearish momentum return, the first target is probably those lows at 48,600, or maybe that open price there about 48,800. I'm not looking for anything significant at this stage other than that bit of a pullback, because Wall Street sentiment is very buoyant. But by all means, keep an eye on the VIX. And if we do get a sell signal for Wall Street in general, the Dow Jones is my preferred vehicle. If that's useful, wish you best of luck with your trading.